Hey everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. Here this Tuesday, we're here every Tuesday and Thursday from 1:30 to 2. What a big day today! S&P futures pushed up to the 57.36 and dropped 50 handles off the highs. Nasdaq futures were trading above the 19,840, and they dropped about more than 200. Actually, at one point when the S&Ps were just trading in the last 30 minutes ago, 30, 40 minutes, around the 1250, 1230, 1240. We actually had the indexes and the NASDAQ futures down on the day, right? And now they reversed here. I would look to take shorts here on the S&P 70.5 to 70, 57 and a half up to 57.07.5. NASDAQ futures 90 up to the 19,692 level up to the 17,720 level. This is the first bounce on the 5-minute time frame after the 15s reversed to sell. So basically what I'm going to show you here today is when you look at so today's title is really about sell divergences. You could be in a positive trend, but once you're in a positive trend, you can have a buy and a sell divergence. And so, for example, today we were in a very bullish trend. NASDAQ just dropped 10. If you like to cover, you can cover below 83. S&Ps, I would look to cover anywhere between the 95 and 98 level if you're shorted the S&Ps here. So what you're looking at here, okay, what you're looking at here is the understanding that when we made new highs today, both the 30-minute time frame on the spiders and the 60-minute time frame did not. Let's look at the 30-minute, which is right here. You can see the 30. Let me see the 30 and the 60 here. This is the 5-minute. Look at the S&Ps drop just now here. Okay, let's see. This is the 5-minute. Okay, this is the 30-minute, and let me just switch this over to the 60-minute time frame, the 1 hour. You can see on the new highs here, the MACDs were negative on both the 15 and the 30. If you draw your horizontal line right here on the new high, there's no way. The NASDAQ just dropped 20. Okay, Q's just dropped here as well. Now, when you're making new highs in a bullish trend, and the MACDs on the 30-minute time frames did not confirm the highs, these are sell divergences combined with the overbought readings. This was an abs. I did not even flinch. I did not even flinch on this pattern. This pattern was very, very bearish. This pattern was a non-confirmation / sell divergence in a bullish trend because the 15, the 30, and the 60-minute time frames were still bullish on my indicator 4. So what you need to understand and what you need to remember is when you see these divergence patterns, and I saw it during our live stream, when the S&Ps were pushing up there, 33.5, dropped 7. 33.5 this morning, dropped 7. 33.5 again, dropped 6, 7, 8. When I pushed up to 36 on the S&P, I think the high was 36.5. I gave the range. I would look to short between the 36 and 42 range. And let me tell you, they never looked back. Okay. And then all of a sudden, we got the reversal on indicator 4 on my 15-minute time frame, which just signaled for me that the highs are in for the day. Okay. On the spiders, the diamonds, the Qs, and the Russell. Look at this short on the S&P. On this beautiful bear flag, this is a beautiful, beautiful pattern. Okay. S&Ps just dropped 8. NASDAQ just dropped from 92 down to 62 or 59 just now. These are great, great patterns. And what I teach each and every day using my software is the ability to recognize these patterns, and these patterns repeat themselves on a daily basis. We had some really great short trades in gold today on non-confirmations, and then we had the correlations when the gold futures correlated with their 15 and 30-minute time frames on the GLDs. My research has shown me when you're trading the index futures or commodity futures or financial futures, that what you really want to do is during the US session, you want to be able to have the underlying ETFs align and use the continuous contracts, which trade 23 and a half hours in a day, and combine it with the underlying ETF, which trades 6.5 hours a day from 9:30 to 4. So here's a beautiful trade. Now we had caught the long on the S&Ps near the lows based upon the 30-minute buy divergence in my indicator 4. So we caught that push up, and then obviously the trade ran right into the 10-bar weighted moving average. Now, if you think about this, tomorrow they're looking to potentially cut interest rates 1/4 point. The Federal Reserve has said that they're not going to cut interest rates unless the CPI number gets to 2%. And that is not happening anytime soon here. Inflation numbers are quite high still. They don't really factor in electricity, auto insurance, property taxes, the things that everyday Americans have to pay for, right? They exclude food and energy to a degree. They don't look at apartment rentals. They don't look at so many different factors. If they did, it would scare the wits out of most people here, okay? But we all know how much food has gone up and how the average family is struggling, and how 61% of the people in this country live paycheck to paycheck. So tomorrow's cut in interest rates, 1/4 point, I don't think they're going to do 1/2 point. It's already priced in, and I think that it's all deemed political. Now, with that being said, it's not so much of the 1/4 point cut tomorrow. It's what they're going to say after that. Are they going to remain dovish? Are they going to go from hawkish to dovish? Are they going to say it's data dependent, which they probably will? Are they going to say something like, well, we see the job market starting to soften, and we got to start take actions with this and whatever? It doesn't make a difference. This is a political environment right now. There's an election in less than 50 days, and one candidate wants to leave taxes and cut taxes and really drive an economy. Another one has a different policy and a venue. So again, it's up to people to vote. It's up to people to decide. Economy is number one, obviously, and that's what brings all of us to prosperity, right? So, but again, whatever happens, the markets do not like uncertainty, and the markets will be very skittish as we get closer to the election, okay? But again, you trade what you see. Patterns repeat themselves. Just on a pattern today on the 30-year bonds, beautiful pattern. The 30-year bonds were trading at the 127 level, and then boom, they dropped about 830 seconds in a blink of an eye. So again, these patterns that I have spent nearly 10 years of my life building using my proprietary software, which is on TradingView. And those of you who like to gain access to this and come to my live stream, you can text me or call me at 914-500-7484. So again, what I'm showing you here, okay, you're making new highs, and this is an absolute Picasso. So when I say a Picasso, I'm talking about a pattern that, you know, is so dynamic, so so powerful. And when you have that, okay, when you have that, you basically are now looking and understanding the relevance and importance of a sell divergence. So you could be, again, in a bullish trend, okay, on the 15 to 30 and the hourly, and you're making new highs, and the 60 and the 15-minute the 30 and the 60-minute MACDs are non-confirming. NASDAQ futures just dropped 40 just now since we've been on. In a matter of 9 minutes, we're on 10, we're on 9. S&Ps, we're trading 70 and a half on that pattern, just dropped 9. So what I teach everybody each and every day in our live stream from 9 to 4 is identifying these patterns, guiding them, teaching them, understanding how to use correlation studies. These are very, very important things to learn. Using the SDSs. So I got the sell reversal on the spiders on the 15. I got the buy reversal on the SDSs. The pullback on the 5-minute SDSs gave me the short on the S&Ps on that pattern. Okay, really, really great. S&Ps down. Look at it. Nasdaq down 50. Qs just dropped $1. These are great, great, great patterns. S&Ps being on the right side of the market is the most important thing that you want to learn. Understanding how these patterns repeat themselves, using the multiple time frame, using the multiple indicators. S&P's down 12. Nasdaq down 60 now. Nasdaq down 60. 13 on the S&P futures. What a magnificent short pattern. A short pattern went right into my 10 bar weighted moving average. Let me see if I can bring this up here. I'll show you this here on the 5-minute here, and I'll switch this to the 15-minute. Okay, so if you see here, oh my God, what is going on here with this? Oh man. Let me just shift this over here a little bit. Understand why this does this. Okay, thank you. Okay, so here you can see the algorithm reversed to sell at 12:30 on the 15-minute time frame. Once I got the indicator 4 on my 15-minute time frame reversed to sell, I knew immediately the highs were in for the day. The highs were in for the day. Now the 15-minute time frame reversed to sell on my indicator 4, okay, to negative. The 30 and the 60-minute time frames were bullish. So now that puts me in the camp of being in a disconnect, being in the camp of a disconnect. Okay. Now, when you're in the camp of a disconnect like that, right there, okay, when you're in the camp of a disconnect, then the most important thing to recognize is you then have to look at the next pattern, which is the short. Nasdaq just dropped 70. S&Ps just dropped 14 here. Okay, so you look to short the first bounce. You see the negative MACD here, right here, above my what's called my pivot line. Negative MACD, blue over yellow, and look at the bounce right into the 10 bar. Look at this high, 70.5. Okay, S&Ps are still dropping, down 16 now. Nasdaq futures down 80, down 80 on that. Does anybody have any questions here on that? Coinbase, everything really aligned perfectly on the 130, 133, 135 bar. Beautiful short patterns. Nasdaq down 80, S&P futures down 16 off that number. A magnificent short pattern. Magnificent short. If you look at stocks like Tesla, they just dropped $1.50 on that. So obviously stocks in the S&P and the NASDAQ 100 are going to follow suit. Microsoft dropped over $1, okay, or the Dow dropped about 70. The Russell dropped about 60. So these patterns repeat themselves, and that's what I teach each and every day, whether you're trading the Dow futures, the Russell futures, okay, using the underlying ETFs really will help you really see the markets. Because again, like I said, the continuous contracts trade 23.5 hours in a day, and the underlying ETFs trade 6.5 hours in a day. Using this software, I believe, will help you and guide you to becoming a great futures trader. You have a great mentor, 41 years plus in the industry with technology. So, right, so you, my 5 keywords: consistency, discipline, confidence, patience, and passion. Nasdaq futures close to being down 90. S&P's down 16 here. Okay, so what I want to say and what I want to show you is, since this morning we've been back. Wow, S&P is down 19. Nasdaq down 100. Wow. NASDAQ futures down 100 in less than 20 minutes since we've been on. Okay? Unbelievable. Unbelievable shorts. What a beautiful short pattern, and still going lower here. Okay? This is a unbelievable. NASDAQ down 120, looks like 115, 108, sorry. It's got 110 plus. Okay? NASDAQ futures dropping, and S&P's dropping on that beautiful short pattern. Now, when you look at the SDSs, the Pro Ultra Short on the SQQQs and the SDSs, they were in a beautiful buy pattern that confirmed the short. So if Billy can bring up the SDSs for me, if he can just do that for me really quick, and I can show you why this pattern, okay, look at this beautiful pattern. Look at this beautiful pattern. And I have the SDSs up in front of me that gives me the ability to see this, okay? So when you have the MACD crossing positive, blue, yellow over blue, below my horizontal pivot line, the algorithm reversed to buy, okay? This is the first pullback on the 5 minute on the oversold condition. I used a smaller time frame, and then boom, what happened? Boom, what happened? That buy resulted in confirmation of the short on the spiders, and we got absolutely cabooshed. Absolutely cabooshed here, okay? Absolutely cabooshed. All right? Okay? All right. Now, when you have these patterns and they're setting up in that nature, okay, what's important to understand is how to then learn how to scale in and scale out of a position, right? So when you're scaling in, depending on your account size, you may want to switch to micros, or in a pattern like this, you may want to switch to the big ones. So I said, look to short the S&Ps, what, 5,700 and a half up to 07 and a half. Unfortunately, on this pattern, you would have only probably got in on one contract, whether a micro and or a mini, because I think the high was 70 and a half on that. Okay. And so when you have these patterns, okay, all right, and you see this type of pattern and you say, okay, I'm going to sell one here, I'll sell two here, or I'll sell three here, whatever, okay, the bottom line is what you're looking at is the understanding that you, as you're scaling in, now if you sold 70 and a halves on the S&P or 19,690 on the NASDAQ or 92 on the NASDAQ, boom, as it's dropping, I would just keep lowering your stops, okay? I would just keep lowering your stops. Now, the reason why the S&Ps just rallied just now is because it had a little buy divergence. It made new lows, and the MACDs did not confirm on the 3 and the 5 minute time frames, okay? S&Ps just rallied 12 just now. NASDAQ was trading, I think, like 19,590, and it just ran 35. So you're going to see volatility here in the markets. And being able to, I always tell people all the time, if you can master the art of divergences, you have mastered the art of trading. My strategies are all predicated on divergence patterns, buy and sell divergences. So it's important and imperative to fully understand that these divergence patterns repeat themselves each and every day, and you can be able to visually see this using the technology that I have. And if anybody wants to contact me, you can please contact me at 914-500-7484. I'm more than happy to share with you the understanding of using this, my overlay, which is purely all based technicals. And I think that is something that could really enlighten and help you be more consistent in your trading. Does anybody have any questions at all? Tomorrow, I'm very privileged and honored to be part of the trading summit tomorrow. I believe I'm coming on around 2:30 to 2 to 3:15 or 2 to 2:45. They haven't really told me exactly yet. S&Ps here, I probably would look to take a short on these S&Ps here, 93 up to even on the S&Ps on this what I call a double red short. NASDAQ futures 40 up to 45, let's see here, 40, 48 up to 78. S&Ps pushing up here, just ran 16 off the low. Now, I'm really honored to be here each and every Tuesday and Thursday from 1:30 to 2 with Back to the Futures. To me, there's no greater place to be on Tradier Hub because I'm so excited with the new products that in trading futures at Tradier. More and more people come to me from around the world and want to learn how to trade futures, and it gives me great joy to be able to guide them, teach them, and fully understand the meaning of trading futures. I think trading futures for me is something I love to do because of the fact that it does give you the ability. Look at this buy divergence, unbelievable. The buy divergence on the S&Ps off the 5-minute time frame made new lows and non-confirmations. But again, it's really up to you. A lot of people say, "Oh, I don't know futures. I'm just really worried, and I don't really know what I'm doing. How do I use the ladder?" Well, practice, number one, using the ladder, putting the orders in, and then being able to fully understand the importance of margin, right? Some firms, I'm not going to mention the names, have significant margins, but here at Tradier Futures, the margins are phenomenal. $50 for micro, and I believe $500 for the S&P futures. So if you have a $4,000 or $5,000, $3,000 or $4,000, $5,000 account, and you want to trade micros, well, if you do 10 micros, it's $500 coming out of your account on that trade. Okay, granted, each contract there will be a commission on. So, for example, if you just did 10 micros, right, and you just made 2 handles, you made $100 on that. And for example, obviously less commissions. So there is a lot of people like trading micros. Okay, I think it's a great instrument. You go from paper trading to trading micros, and I think S&Ps I look to buying back here 92, 95. Nasdaq I've been looking to cover 40, 35 to 50 range on the Nasdaq here. What's important is to be consistent, right? To be able to have software, to be able to have the ability to trade the market, to be able to fully understand the relevance of trading futures, okay, and the tax consequences, which are really more in favor of trading futures than stocks. But again, you got to have a comfort level. You have to have the ability to learn trading futures. It's if you learn trading options or trading stocks, it's no different. Okay, some of you type orders in, some of you use what's called a matrix or a ladder, as I call it, where you just go click, 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 you put your orders in, and that's the end of it, right? It's important for people to feel comfortable in the asset. But Rome wasn't built in a day. So what you want to do is to be able to just learn from someone like myself and take the time to really, really learn trading futures, because I do believe it could change your life, right? To be able to trade a liquid instrument in a way and not have to worry about, premiums or deltas or anything of that nature. So it's important. It really is. The Qs just ran about $1.50. Nasdaq just ran unbelievable. Nasdaq dropped 120. S&Ps went from even and a half down to 78 and a half, and just rallied 20 here. Okay. Again, hopefully we'll get one more push down here. Right now you have oversold conditions on the 30-minute time frames. That's where, but more so, this push down just now on the S&Ps was off of this pattern right here. That's the 30-minute. Let me just switch to the 5-minute right here. If you see the 5-minute time frame on the S&P, that's the 30-minute. Let me just switch this one to the 5 since it's the bigger of the chart right here. So when the S&Ps were making new lows here, the MACDs on the 5-minute time frame did not confirm. That is a monster buy divergence. A monster buy divergence. Okay. Obviously, with the rate cut potential tomorrow, I do believe there'll be some type of a short covering rally if there's even any shorts left in the market. Okay, but you see this beautiful bear flag short. Okay, it gets all the way down to the 78.5, rallies 20. Okay, and now we should start dropping and to make it should make a higher low here on the next push down. Crude oil, beautiful patterns today on the crude. When you have crude oil and you're looking at the USOs, we had a really great pullback on the USOs at exactly 10:35 on the USOs. So the USOs is an instrument that we look at when you're trading the oil markets, right? I look at that as their underlying so-called ETF. The 30-year bond futures, I look at the TLTs. And when you look at the YM futures, I'll be looking at the diamonds and looking at the RTYs. I then be looking at the IWMs. If you're looking at the, like I said, gold futures, I then be looking at the GLDs, and the GLDs are very powerful. Matter of fact, gold, if it got up there, I would look to short 96 to 98 on the gold futures. I have nothing but sells, and now I'm getting an overbought condition on the 15-minute time frame after it correlated. So I think the next move on gold is down. Does anybody have any questions here at all? Oil, I'd be a buyer here in oil between the 71.20 and the 71.30 on crude oil. 15-minute time frames are getting deeply oversold. Okay. Does anybody have any questions here at all? And it's really important to be proactive, to be able to ask me any questions, to be able to really fully understand how to trade the futures markets. This is what I love to do. I love to help people. I want everyone to be successful in their trading, for people to be consistent each and every day. But more so, what I think is important is to be able to make money, right? To be able to learn from me, where I can help change your life, where you can look and be able to look in the mirror and be proud of yourself and learn from someone that's been doing this now for over 41 years. Okay. I hope to make the 50-mile mark one day. If that happens, then I'll be 71, but we'll see. Okay. That'll be a long, long, long career. All right. With 2 minutes to go, tomorrow again, we have the FOMC, and it's going to be probably very quiet right after the opening. Again, it's not the quarter point what we're looking for. It's the language thereafter. And if you look back in history, the cuts in interest rates end up always causing the market, not always, I should say, but a lot of times the markets react negatively towards this. If they cut 50 basis points tomorrow, to me, I think, which I don't think that's going to happen, the Fed fund futures are only at 50% on that. But I think if that happens, it's showing the world that the Fed knows that the economy here is slowing drastically. Okay. And it's not good, because that's not good for inflation. Okay. And the CPI numbers they'll have no regard for the CPI numbers after that. Okay. Let's see here. All right. Again, right now, we're just waiting to see if the 15-minute time frames could work off this oversold condition. I do think we get one more push down to a higher low. And if that happens, I then think that between now and the close, there may be some type of a short covering rally. Okay. Gold futures pushing up here. MACDs are positive. 15s are getting overbought on the 15 into the negative MACDs. So I would look to get the next pullback on gold should make a higher low. So the low on the day is below the 25.90 on gold. And I think that gold will push down and make a higher low once the 15-minute time frames reverse to sell. If anybody has any questions, I want to say thank you. Tomorrow, the trading summit, I should be on between 2 and 2:45 or 2:15 to 3, still to be determined. I'll be here again on Thursday from 1:30 to 2. Back to the futures. NASDAQ futures, I would look to cover between the 40 and 55. S&Ps between the 92.5 and the 95.5 if you're short. Gold, I'll be looking to cover gold here between the 95 in the 96th level. Have a great day, everybody. God bless, and I'll see you this Thursday. Well, I'll see you tomorrow on the Trading Summit, or I'll see you on Thursday. Have a great day, everybody.
Capitalize on stock market uncertainty this coming election. When most see disaster in the headlines, informed traders see dollar signs. Elite traders have embraced market fear for decades, and now you can too. Join us at our exclusive Fall Tradier Virtual Summit, sponsored by SIBO, on Wednesday, September 18th, 2024 at 10:30 a.m. Eastern Time. Claim your seat at summit.tradier.com before registration closes.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.